So today we're going to do a video on PayPal and is PayPal stock currently a buy, and I'm also going to say what I think the upside is on PayPal going forward. Now I don't always do these videos for a few reasons. One reason being the views are not normally that good when I talk about a particular stock, and combine that with it takes me a while to put these videos together, so we'll see if that's changed. And also the other thing is that for me, I'm putting my neck out on the line because I'm saying if this is a buy, a sell, what potentially I think the stock can return, and that's always quite tricky when you put your neck on the line. It's a lot easier to kind of dodge the questions and just talk about, oh look, there's going to be a stock market crash, oh look, the UK housing market's a little bit weak, to actually talk about a stock and then commit to if I think it's a buy or a sell or what potentially the return is. Always a little bit harder to do that, and I can see why so many of the big YouTubers dodge it, but we're going to do it today. So hopefully if you're looking into PayPal, this video is useful. Let's get started. So PayPal today currently had a pretty decent day. The stock is currently up 2.3% and is $63.27 as it just updated then. Having a good day because it appointed its new CEO, and that's what I think has been one of the things that maybe has been holding them back recently, and we'll look at the new CEO. But at the moment it's a 66 billion market cap, trading at 17 times earnings, very much near its 52-week lows, very much off its 52-week highs of $103, and it's definitely a long way since it was kind of $300 in 2021, and obviously went to absolutely ridiculous valuations there. But a lot of people look at the share price now going, is this an opportunity? Especially when you consider that it is $63, and the last time it was $63 you have to go all the way back to around about 2017. So yeah, you're going about 6 years ago since it was these levels, and a lot of people looking at that share price and going, this is a good opportunity, or is it a good opportunity? And sometimes it is, sometimes it isn't, and that's the big thing that you got to kind of weigh up, that is this a buying opportunity and it's gone way too low, or is it a reason why it deserves to be this low, I guess. So PayPal, it did announce a new CEO today. The new CEO has come in, and it's Alex Chriss, and he is from Intuit. If we actually pick on to his actual LinkedIn profile, you can see here that he was the CEO of College Web, which was acquired by Ustream Media Networks. So that's obviously really good that he had a company in 1997 to 1998 for a year and 7 months, which was acquired. He was the vice president there as well after it was acquired. He then went on to be an executive vice president at sales and marketing at Kronos Advanced Technology, and then he was also a couple of directors of the boards, and then from there he actually moved to Intuit. He had a lot of different roles in Intuit, and it looks like he's gone up the ranks in Intuit. Or his latest role was the EVP and General Manager, Small Businesses and Self-Employed Group, and he was at Intuit for 19 years and 2 months. So a very good background, very experienced background, running multiple companies, being on the board for multiple companies, and also I think he's around 49, I believe, but he doesn't look 49, so a little bit of compliment there for him. But obviously looks like a pretty good employment for PayPal. Now obviously PayPal itself obviously offers a lot of services. You've got also the personal part of the platform where you can send money, request money, you can pay with credit, which is obviously the buy now, pay later. You've got the actual buy on platforms. That's the part that I personally use, is that I want to secure checkout. Sometimes when buying something, I'll shop through PayPal. And the other part of the platform is Braintree. So this is where you may want to go on a website, and you might want to pay on that website, and it looks like you're paying through that payment system. And it looks like a seamless integration on that website, and realistically you aren't actually paying through that website. What you are using is you're actually using PayPal, but it's an unbranded platform. So this is growing really well. This is actually growing 30%. Now one of the little issues with Braintree is that it is a lower margin product because it is unbranded, and they also own Venmo. So a lot of people say that PayPal at the moment, the actual wallet part of the business isn't doing that well, whereas the business is still doing very well, and also the pay with credit and the shopping online is still doing very well. But realistically, Venmo is that. People forget that PayPal actually own Venmo, which is a big app in the US where it's peer-to-peer, sending payments to each other, and this is actually a very popular app. If you actually go into the App Store, you can see here you are currently picking up the 44th biggest pay app in the US, and you'll see here that Venmo is actually 49. So that's very much in the lines of Hulu, Paramount, Target, Ticketmaster, Google Photos, Nike, Roku, Pinterest, McDonald's, Discord, Facebook Messenger, major apps it's up there with. So obviously you're picking up two really popular apps at the moment. Now obviously the big thing is, from these products, can they carry on redeveloping them and increase, now they have a good customer base, can the new CEO, is he able to maximize PayPal's potential of this user base, of maximizing PayPal, maximizing Braintree, Venmo? Are they potentially going to move, they've got already a user base here. Do they now put that user base where they can increase potentially trading platforms? This is a great thing with PayPal, is that it's got so many users that they can add features in, and a lot of that is straight down to profit already because of the amount of users that use it. So I think the CEO took a really good job here, because obviously the shares are down in the dumps, but the potential through all these platforms that they have, it's very easy to them add into new platforms and increase that profit and revenue straight away because of the user adoption. And even though there's potential for so many features further down the line, the recent earnings were actually still very good. You'll look here, they actually grew at 7.4%, and the suggestion is the recent quarter in July, the growth was actually up to 9% as well. Total payment volume is growing as well, 11%, and also the EPS as well was growing rapidly compared to last year, even though it did come in line in this quarter. They also announced a 5 billion buyback of shares, which we'll actually be talking about a little bit later on. Now, we talked about a lot of positives there inside the company and a lot of moving parts. Now, what are the negatives? Because obviously, if you've got a share price that is like this, there's got to be some negatives with the stock. And personally, for me, I don't think they are negatives, but I will show you what people are using as negatives for the company. So the first of all is the total active accounts. People are saying it's a dead platform because the accounts are dipping. Now, the reason why is because PayPal at the moment don't focus on acquiring accounts, and I actually think they should take this off their earnings report. They don't focus on acquiring accounts. If they wanted to, they could. The reason why is that potentially they could go, okay, if you want to refer a friend, if you refer a friend, you get €20 or $20 or £20 for everyone that you refer to. All of a sudden, the shares go up, but at the end of the day, are they going to use it? Is that just going to be a cost? So it's very easy to get that number up, but they want to make sure that the people that are using the platform are using it more and more, and actual customers that are coming to join the platform to use it. So I don't think this is key, but a few people are focusing on that. The next thing is to do with Apple Pay and the growth of Apple Pay. Obviously, people think Apple Pay is a lot easier, direct on the phone, easy to tap and pay on Apple Pay compared to something like a PayPal. Now, I would say that this is true. A lot of people are using Apple Pay, but for me, in my opinion, it is a bit of a threat, but I personally never went and paid with PayPal on my phone. I use PayPal for online transactions. I don't use it for tapping and paying in person. For me, I've always used, debit cards, credit cards, and all that's been replaced for me is I now use Apple Pay for that. That hasn't changed for me, and I think that's the big argument here, is that Apple Pay will do very well and probably will do better than PayPal. But for me, PayPal isn't that. PayPal isn't that kind of tap and pay. For me, it's more about sending money, secure checkout, buy now, pay later, the checkout on Braintree, Venmo. So I don't think this is a big issue. And as well as that, even if you did want to say it was a bit of a big issue, there's enough room for, in my opinion, a lot of players in this space. Between, everyone out there, there's enough room where there's 2 or 3 players in this space. That's the big thing. I think that sometimes people think it's either one or another. When it comes to payments, it's a major area. There's enough room, in my opinion, for 2 players in here. So that's probably the 2 negatives on why the share price is down, and obviously the positives of where the company is growing very well at the moment, and also potentially where the CEO looks at creating more income for the business. Now, if we do look at the past performance and the future performance of the company, you can see here that historically the company's done very well, historically good revenue growth. This is a very good company when you look at these numbers, and you can see the profit as well across the years has been moving up in the right direction. 2017, when the share price was last year, you're talking 11 billion in revenue, 1.42 billion in profitability. We're now at 4 billion in profitability and 28 billion in revenue. So you can see here the revenue and profit hasn't dipped compared to what has happened to the share price. In fact, it's up a lot, so there's no issue there. And looking at future forecasts as well, we can see here the profit is forecast to keep increasing at good rates, and they're expecting around 10% growth in profitability. And on the revenue point of view, you can see here analysts are forecasting around about 10% in growth in revenue as well. So obviously this looks like good growth as well going forward. Financial health wise, it's a pretty strong company. Debt has increased a little bit, as you can see here, but still sits around 53%, which isn't that bad. And they do sit on 9.9 billion of cash compared to 10 billion in debt, so very healthy cash balance as well. Management wise, obviously there's the CEO change which we mentioned as Dan Schulman does leave the company. However, as a bit of a parting gift, he did buy some shares into the company, as you can see here, which was around about 2 million of shares, buying them around $76, which is obviously a lot higher than where the share price is right now. So it shows you that he was quite confident to buy at them levels, and it has dropped even more there. So probably a little bit more of a bullish sign there at the moment. And obviously 16 times earnings. This is historically very low for PayPal. Normally this company's trade more towards the 30 times earnings. Obviously there is going to be more slower growth than what it has previously been, but still that's very, very good growth. And actually when you compare to the peers as well, it's a very low compared to what its peers trade at. So the peers trade at 32 times, so obviously nearly half what the peers trade at. And this is actually the historic PE of PayPal, as you can see here. So you look over the years, around 40, 50 times earnings. So we are way below what we historically trade at for PayPal, and you can see here Simple Wall Street do currently have a stock as 43% undervalued. If you do want to join Simple Wall Street, join through the link in the description. You get a free trial, and if you join through that link, you also get 40% off, I believe it is. So definitely worth going through that link if you are wanting to use this platform that I'm currently using in this video. And as we just mentioned there, the company is also buying 5 billion back in shares, which at the moment, considering how low the shares are, I think that's around about 6-7% of the company, which is a lot. You know, to be buying back that amount of the company is obviously really good. So in my opinion, I think the company is going to do very well. There's enough space for it to carry on doing well. It is growing at the moment. Profitability is going up on the business. They've got a really good track record, decent balance sheet, new CEO with potential on how to expand the company, and the risks that are here. I don't think the active accounts is a big issue. And I think as well, when we look at the competition, I think the competition won't affect them that much, and even if it does affect them, there's enough room for a few players in this space. So considering that, I am obviously quite bullish. I'm quite bullish on PayPal, and obviously I am a shareholder in it, which is probably worth saying. But let's have a look at some numbers to have a good idea on this company. So if we have a quick look into PayPal, the price is currently $63.13. It's a 69 billion market cap. And for this company, it was a little bit tricky because are they buying back shares? Yes. So I tried to work out how much of the company they're going to be buying back in the next 5 years. That's what I look for. 5 years for the future of the company. And the reason why I do 5 years is just after more than 5 years, I think the future always gets a bit blurry, and there might be a new competitor that comes in that time frame. Now, obviously, it's a bit tricky because of share buybacks, because they are buying back shares. So I did think that in the next 5 years, they could potentially buy back 10% of the shares outstanding. Now, obviously, considering that they're already planning to buy in the next year 7% of the company back, I think realistically, can we expect them to buy another 3% back in the next 4 years? I don't think that was a crazy suggestion. So that's where I got back. That's where I got my numbers for the share buyback. The top price here, as you can see, is the one with no share buybacks, which obviously I think they will do and they should do. And that's the bottom one is with a 10% share buyback of shares. What I did is I've done a 4% revenue growth, which I don't think they'll do 4%, but that's worst case scenario. 8%, which they are roughly growing around about now, and 12%, which I think they can get back to in a bit of a longer term with some new product features. So I think we're probably looking at more the 8%, 12% range for PayPal. Now, profit margins, I've gone 14, 16, 18% on profit margins. When we do look at what PayPal has historically been on a profit margin, they're fairly consistent. So if we go here, you can see they're around about a 12, up to a 14, up to a 20-ish, and right now they're around about 14-ish. So I would suggest they stay around this kind of 14, 16% profit margins, and I would think it would stay around there. Obviously, the big thing that you could potentially say is obviously Braintree is growing really well. However, that could potentially be lower profit margins. So I've gone 14, which is obviously a bit on the lower side, which has been 16, which I think is quite reasonable, and 18 if they are able to improve that profit margin slightly. So I think they're pretty fair profit margins. I've gone a multiple of 20 times earnings. Like I said earlier, it is higher than where it is at the moment. Obviously, it's 17 times earnings. I think that it's definitely a fair market average valuation for a company like this. I'd potentially argue that you could be talking more, 30, 40 times earnings, but let's go 20 times earnings to be a bit conservative. So I think all these numbers are conservative, really, 4, 8, 12%. Profit margin of 14, 16, 18%, 20 times earnings. Overall, on the low side, if we grow at 4% a year with low profit margins, we're going to be around 40% return with a 53% if they do share buybacks, which I still think is not too bad in the next 5 years. You're probably somewhere in line with the S&P 500, maybe a little bit underperforming. If we do grow at 8%, I think we could potentially see somewhere between an 86% to 104% upside if they do the share buybacks. And on the high side, 142% on the share price return. And if they do share buybacks, if they buy back around 10% of the stock in the next 5 years, it should be around 166% return, which is obviously really good. I think you'd be really happy with that, and I think you would outperform the market with that. I think both on the middle one and the higher one, you'd outperform the stock, and obviously that's at 20 times earnings. If we do start actually factoring, potentially they go for a bit more of a premium, which obviously the market at the moment is, the sentiment around PayPal is very low because the share price has deteriorated so much. Obviously, if all of a sudden if the market suddenly thinks, oh, the share price is going up, the sentiment starts turning, people start buying, it starts trading at a bit of a premium. Let's just say, for argument's sake, they do start trading at a little bit more of a premium rather than, let's say, 20 times earnings. Let's say they start growing at 30 times earnings. Then all of a sudden you see that the 5-year upside goes on the middle side 179% to 206%, and on the higher side 264% to 299%. That's obviously a really big difference. So I think the big questions you have with PayPal is, can they maintain the higher amounts of growth with competition? Obviously, if they can do that's really good. If they can keep the profit margins even with a unbranding products like Braintree, obviously that will do very well. And if they can go back to trading at a bit more of a premium, that's where the really big upside can come from the stock. But even if it stays at like a market average valuation here, even at historical low valuations, I still think you're outperforming the S&P 500 owning this. And I think if it is to be a little bit more respected on a valuation basis and have a bit more of a premium, I think that's where you'll do very well as a PayPal shareholder. And I think that's what ultimately you're hoping for, that there's a bit more of a premium on the valuation. You could do very well. But even if it doesn't work out how I think it would, I think you could still beat the S&P 500. I think the really big returns with PayPal comes if it does get a bit more of a premium on the share price, which I think it can do. I think if you are doing an 8% profit margin, growing at 12%, buying back 10% of your stock, I think you will trade at a premium. So I would expect somewhere between 100 to 200% return in PayPal in the next 5 years. So I am a PayPal shareholder. I am actively buying this one, and I think the new appointment on the CEO is actually a really good appointment as well, and should do very well. So that's the video for PayPal today. As always, I hope you enjoyed it. I hope there's a lot of good information in there. Like I said, these videos do take a long time to put it together, and normally when I do these videos, the views aren't always that good, and that's why I'm always a bit hesitant to kind of do these videos, because with the time that's put in, you would hope for the bigger views, but sometimes it doesn't happen. So if you did appreciate it, make sure you give it a like, because then we could do a few more in the future. But hope you enjoyed the video on PayPal, guys. If you could hit the like button, if you're new to subscribe, I've already said that 3 times, but I'm going to say it one more time, and see you in a bit.